As a fellow first gen, I respect you so much because of how much you were able to accomplish with limited resources and is someone who has just so much love for your family. You're now a principal at Zeal Capital Partners. Emily, welcome to the podcast.
Thank you for having me.
Could you talk about your journey from the beginning of being interested into VC to right now?
Absolutely. So just a little bit about me. I grew up in the Chicago suburbs and come from a immigrant family, and I have two brothers, my parents and my grandparents. So it was a big family growing up. I was always really interested in entrepreneurship. My parents were former engineers who later started their own companies. And I was also always very interested in healthcare and the life sciences. I really liked biology, really liked chemistry, and I also saw healthcare as a means to helping people. And so naturally, since I liked healthcare and I liked entrepreneurship and business, I decided to study both in college. I went to the University of Pennsylvania and I was a dual degree studying biology in the College of Arts and Sciences and finance in the Wharton School during my undergrad times. And while I was a student at Penn, I really engaged in opportunities throughout the intersections of business and science. So I worked at digital health startups at the infancy of digital health back in 2014 and 2015. Companies like Neuroflow in the behavioral health space and Healthy, which is a digital health EMR platform. I conducted research in the oncology space at Northwestern. I worked on a clinical trial looking at an opiate withdrawal treatment. And I also worked in investment banking at Goldman. And so really got an intersection of both the science side and the business side. While I was at Penn, I got to explore impact investing through several clubs. And it was then that I realized that venture capital was an interesting intersection between some of my passions around startups and entrepreneurship and business, and also my passion for healthcare. And so after I graduated, I went into investment banking at Goldman Sachs, focused on healthcare. And while there, I worked on IPOs, multi-billion-dollar M&A deals for healthcare companies, life sciences, biotech, many companies that you're probably familiar with, and mostly larger companies. While I really learned a lot there, especially as a job coming out of college and working in New York City, I really wanted an opportunity to get closer to earlier stage companies. And so I was able to make the transition into venture capital in the beginning of 2020. I moved across the country to join one of the largest multi-stage venture capital firms, NEA, New Enterprise Associates, in February 2020. And as you may remember, it was a month before the lockdown due to the pandemic. And so it was a pretty crazy time starting a new job, moving across the country from New York to the Bay Area, trying to find community, both from a professional sense and personal sense, to be making that transition into VC. But what I really focused on was how can I make the best of this now mostly virtual environment? And so I tried to meet with as many founders as I could over Zoom, meet with as many investor peers. And once we actually did get vaccinated and I moved back to the Bay Area, I'd actually went back home and spent time with family in Chicago during that year when we weren't in the office. But when I went back to San Francisco in 2021, I started hosting events because I didn't see any. And that's how I built up a lot of community. And fast forward, I've been doing venture capital for over 5 years now. I now am a principal at Zeal Capital Partners, where I started our healthcare focus from the ground up and lead it. I joined the firm in the summer of 2023, and it's been a fantastic journey. I love the work. I love being able to partner with such inspiring founders who are really reimagining the future in areas like healthcare and financial technology and future of learning and work, which are the areas that I now invest in at the earlier stages, seed, and have done some early Series A as well. So yeah, that's a little bit about my journey in a nutshell, how I got here, a little bit about my background into VC.
And it seems like, you were always thinking like, where can I make the most impact? No matter what you had to do, whether it's like moving across the country, whether it's like transitioning into an entire different career. COVID was tough for everyone. It was a really, really tough time where you lost your gong gong at COVID. and the way that you were able to just really push through that and yet still keep growing for the future impact that you can make for future companies is just amazing. I was wondering what, in your first few months transitioning into VC from investment banking, what was the most difficult parts besides COVID?
Absolutely. So I would say the biggest difference for me starting in venture capital, transitioning from a job in investment banking, is how structured or how unstructured rather VC is compared to investment banking. When I was working at Goldman, it was really focused on executing, whether it was executing an M&A transaction or a client services deck or a model that my team wanted me to make for a client. And when you go into venture capital, there's a lot of latitude as to one, which companies you decide to meet with, how you decide on your sourcing strategy, how you decide on what to invest in the beginning, and also what are the most important questions to ask in the diligence process. Because you could really boil the ocean here, right? At the end of the day, there's a lot of uncertainty. We're investing in early stage companies and early stage founders, and there's a lot more ambiguity and a lot less structure. So coming in at I was 23 at the time, I had been used to a job with a good amount of structure, a good amount of, all right, let's build this model to value the company for an M&A transaction, right? Super clear, understanding how to do a DCF, right? You look at a company, and I was looking at companies that range from preclinical biotech companies, right, with only mice data or animal data, super interesting technologies, all the way to really interesting digital health companies that were focused on helping patients with chronic conditions, right? Whether it be kidney disease or musculoskeletal conditions. And every market, there are different important questions to ask, right? And for me, I was just trying to be as curious and soak it all up, learn from these founders, learn the most important questions to ask, because there isn't one right way to be a great investor. And so that was probably the biggest transition, making figuring out my path without as much structure as there was in investment banking.
Yeah. And it sounds like, you had that really structured way of going at it before when you were investment banker, because it was kind of controlled variables where as long as you had these numbers, you do that, and then the result would kind of be obvious. But in venture capital, there's like so much variables to kind of take in, and you actually have to decide that. And, it sounds like you found some interesting questions that, you ask founders which can actually gauge if they are the right person to invest in. You mentioned that VC is very unstructured. Who is VC not for?
Yeah, that's an interesting question. I would say there are a couple of areas that I would say I would know about the VC job. One is that it's a very broad job. So if you're really interested in learning about a lot of things every day, then this could be a great job for you. On the other hand, if you want to go really, really deep and actually build a company, then maybe VC is not the best job. Because at the end of the day, our job as VC investors is not to actually go and build the company or operate. If you want to do that, it's better to be an operator or a founder. So that's the first thing. Um, Number two, I would say to be in VC, you have to understand that a lot of the day is talking to people and relationships. So, if back to back Zoom meetings and back to back in person meetings with founders and investors and strategic partners sounds like really draining for you, maybe it's not the best role, because I can tell you I have many back to back meetings followed by diligence and reading, which I find to be really, really exciting. And it doesn't mean you have to be an extrovert, but I think that you need to be eyes wide open about what the day to day looks like. And so those would be two areas, that it's more breadth over depth, that you're not actually running the business, and that the nature of it means a lot of meetings, a lot of relationship building, and long term relationship building. And then the last piece I would add is that VC is a long game. If you're looking for something with quick results where you understand how the company is doing, how it'll exit, then you might want to look at something like working at a hedge fund where the public markets you get feedback very quickly. Or in PE, where it is still a long game, but it's not as long, right? These companies are later stage. And then along with that, there's going to be an element of early stage risk. And so I think all of those elements are important to understand for anyone considering a career in venture capital.
Yeah, and you have to be really, really curious. It's like, especially when you're dealing with the health industry, it's like, Emily has to learn like tons of health terms and then really just stay updated with the terminology and at the same time really understanding what these specialists are actually saying. And then it's like VC, you just have to be really, really, really good at talking to people, but you don't necessarily have to be an extrovert. You just have to be a really, really great listener. And as long as you listen well to the founders, and you enjoy talking to them about, hey, how can we make an impact in this world? Rather than, if you rather prefer to be an operator to lead the front line, to lead the charge, then you should be a founder. If you more want to be on the advising part, then VC is pretty good for you. We talked about who may VC be not for. Could you talk about, one or two stories of people who you hired, maybe even VC interns, or what did two things that they did that made you proud?
I love this question because I really enjoy mentoring. I really enjoy the team building aspect of VC. And most times people don't think about it because, in a lot of ways, VC compared to operating can be more of an individual sport. I really try to think about it as how do you build an enduring firm, which requires a great team. And so, a couple of examples here at Zeal, we have a MBA fellow program. So basically, we take in semester interns from MBA programs and offer them the chance to get involved in our investments end to end, from sourcing to due diligence to portfolio company work, etc. And our first fellow was from U Chicago Booth, and then we also had one from Wharton. We have MBA fellows from Columbia and Northwestern, and so a wide range of different schools. One thing that I I learned and was particularly proud of is that everyone has different backgrounds and experiences they bring into the job. So, for example, some folks had prior PE and later stage investing experience where they brought great quantitative and analytical skills. However, they needed to have a little bit more guidance on how do you narrow down the most important questions to ask when you're looking at early stage companies, which often do not have the same amount of data or the same amount of financials as a much later stage company, right? So for me, it was really thinking about, all right, where is this person coming from in their prior background? And how can we leverage their superpowers and really make the most of that while also empowering them to understand the different aspects of the job being in VC. There are some people who came in with prior startup experience. And so they know what it's like being in the trenches as an operator, right? And so, really taking what's best and also being able to teach them and help them understand what our investment thesis is and what early stage investing looks like and how that may differ from some of their past experiences has been really rewarding. One particular example for my first MBA fellow that I work closely with, I noticed that at first on calls, I would always encourage her to speak up, and she was pretty quiet, right? And I understand that. I remember when I first joined venture capital, I was really much more of a listener, and I had some imposter syndrome even being such a young investor, talking to founders who were so accomplished and so inspiring to me. Over time, I realized that you can ask questions that really end up being insightful and even helpful to the management teams. And when I was having a one on one with this MBA fellow, I told her, hey, you have a really, really powerful background, and your questions could be really helpful and actually insightful to the management team. So don't be afraid to speak up. And you can even send me the questions in advance. can look at it. And I noticed that over the course of her time, her MBA fellowship, she was starting to speak up more, not only in meetings with founders, but also meetings with the team during pipeline calls. She would bring up just really, really good insights that were always there, but that just took some time and confidence to bring up. And so I think for me, having that one on one and sitting down and like, one, just empowering her, but also two, sharing my personal story of how that's something that I had to overcome, that fear of speaking up early on in my career in VC, I think really helped. And so I think that is a really powerful example that I hope she'll continue taking on with her other roles going forward as well.
And it's just like you said, when you're talking to these founders, even like second or third time founders, they founded great companies, and it's an investment from your firm that can really just change the world. So it's like so much responsibility on you, where it's like you would have imposter syndrome. Like that's really, really natural. But because of unique backgrounds, you know, questions that may seem like dumb questions, you should just ask it, because it really isn't dumb questions, because only you have that perspective. And when you bring your perspectives onto the team, that is all that the VC fund wants you to have. And, that's exactly what they brought you on for. So always bring your perspectives and, always ask questions, just like Emily says, based on your unique experiences and what you can actually bring. Could you talk about what is different between working at like a smaller fund or a bigger fund like NEA?
Yeah, for sure. I just wanted to actually build on something you said. I would say absolutely don't be afraid to ask questions. I would also say the importance of listening, and I really completely agree with that. That you need to listen first before talking, especially as a VC, since these founders have been working on what they're building for so long in it, right? We have so many different companies we meet, and these founders are the experts in what they're building, right? So listen first, but at the same time, once you've listened and once you've learned, don't be afraid to ask questions. Even if you don't feel like a subject matter expert, one thing that I took away is sometimes founders can be so in the weeds that they may not have that perspective of hearing the story for the first time. And so sometimes even what may seem like a dumb question or a simple question may actually be helpful for the founder and also in helping your firm understand whether or not to make an investment. So just wanted to add some color to that point. In terms of your question on small versus large firm, I would say a few different things. So at a small firm, in addition to my role in investing, there's a big crux of the role in firm building because Zeal was started in 2020. And so, to an extent, there's so much that we're building here internally. So, I had the opportunity to come in and start our healthcare thesis and focus, build that brand within healthcare, which our founder and managing partner, Nasir, empowered me to do. NEA has had a fantastic track record in healthcare investing since its foundings in the 1970s, right? And so at a large firm, you have an established platform to work from and grow from. At a small firm, you could have the entrepreneurial opportunity to build it out. So that's one example. The second example is the difference you could imagine between a large company and a smaller company. A larger company, there will be more AUM, more resources, oftentimes. A smaller company, more ability to be entrepreneurial and build new things, but also oftentimes having to be a little more scrappy with how you think about it. So I think those are some differences. And then third, I think the size of the team also makes a difference, right? Just in terms of how big the platform is. And at a smaller firm, oftentimes a smaller team, meaning that you'll get to know the whole company faster than at a larger firm perhaps. So the day to day of interacting with a small versus large team just really varies. And so I think there's definitely just differences. And for people who want to be part of a really established platform and mainly focus on investing, that might be a better for a larger firm. For someone who's really entrepreneurial and wants to build something and do the firm building alongside the investing, that's something that a smaller firm can offer.
Yeah. And could you talk about maybe like different roles in bigger firms that, smaller firms don't have? And also like how big is the team in, bigger firms versus like smaller firms?
I would say that at larger VC firms, sometimes you can see really large teams of operating partners or teams dedicated to specific functions, whether it's hiring or specific operating go-to-market strategies dedicated to portfolio companies, right? And you see these at some of the largest VC firms. At smaller firms, you might not necessarily see that because the team itself is only 5 to 10 people or even less oftentimes. And so in that case, you
Yeah.
have investors that are also going to be the ones leaning in as operating partners and just putting on many different hats. The other difference is that at larger VC firms, you'll often have specific investor relations or LP relations teams. Whereas at a smaller firm, you're an investor, you're LP relations, you're basically doing the fund admin and operations as well. And so I would say that at a larger firm, you can kind of see each of the functions of a VC firm siloed out more. So there's the investment team, the LP relations team, the fund operations team, the portfolio operations or portfolio ops team. At a smaller firm, you see people doing more of everything, if that makes sense. Sometimes you can still see some of those roles. For example, we have a part-time CFO we use. We have a great head of portfolio management. We're putting on a lot more hats, though, I would say, on both the investing and the firm building and operation side than perhaps at a larger firm.
Yeah, and it's just like Emily says, at a smaller firm, you really put on more hats, but at the same time, you really get the opportunity to have the full view of what a VC does. And you can do all of that, just like Emily, she was able to take part in building the thesis on inclusive investing strategy. And it's stuff like that where, if you only have a specific role, sometimes you don't really get to do tons of stuff and not know like, hey, maybe I'm more suited in this small part of VC and maybe I'm more suited on another part. Could you talk about how did you get into VC as in like what was the major decisions that let, NEA choose you and also Zeal Capital Partners choose you?
My transition from Goldman to NEA, I found the role through recruiters. And so coming out of Goldman, there are a lot of recruiting firms that reached out to our class of investment banking analysts. And this was pretty early. I remember my first week at Goldman receiving all of these emails. I was literally in training. And at that time it was too early for me to really look at anything. I really wanted to just go heads down on my job, wanted to just learn, right? Just soak it all in. And for me, I've always been a really curious person. And so I didn't respond to any of the recruiting emails initially. And then fast forward a few months when I'm on the desk, it's been a few months, I'm much more settled. And I had the chance to start meeting with some of the different investment firms through women's events, through coffee chats. And so for me, I had always been curious about investing. As I mentioned, did some impact investing in college, and I also worked with startups. And so I was particularly interested in early stage investing in addition to growth investing, which I looked at as well. And so I met with different firms and I ended up getting my job through a recruiter. Ultimately, I'm getting the NEA job through a recruiter. I also landed some jobs in later stage investing in the private equity space. And so I had the direct chance to learn about different stages of investing, later stage and earlier stage. And ultimately, for me personally, I felt like I wanted to work with earlier stage companies because earlier stage and growth stage companies, because I felt like it was a fantastic chance for me to partner with management teams when they were building. Later stage companies oftentimes are de-risked, but oftentimes they've already built a lot of their early product. And I wanted to be part of transformational companies and new technologies. And this was even before AI was the big thing. But things like precision medicine and genomics. Like there's just so many cutting edge things already going on in healthcare. And I really wanted to be part of that. So that was my transition of how I got into VC from banking at Goldman. And then my transition from NEA to Zeal was very, very serendipitous. At the time, actually, I had got promoted at NEA and was just really enjoying the role. And I actually got connected to Zeal through a mutual connection. I worked with him on one of my portfolio companies that I was a board observer of, and he was also on the board of this company. And without me knowing, he was also a family friend to the founder of Zeal, Zeal Capital Partners. And so when Nasir, the founder of Zeal, was looking to expand the focus from fintech and future of learning and work to also include healthcare as that third pillar, he asked this friend slash my board connection, "Hey, do you have any recommendations?" And I was brought up. This is without me knowing, right? And I soon got an email from the founder of Zeal saying, "You came highly recommended, and we'd love to chat. I'd love to chat with you to get to know you better and share more about what we're building. We're looking for someone to build and shape our healthcare focus with a lens towards health equity." And so got on the phone with him, and it was a 2-hour long Zoom conversation between Nasir and me. And I think in those moments, you feel like there's just like a true connection to the mission, to what he was looking to build and what I really believed in, the impact that I wanted to make. And you touched on this, but I had also been a caregiver for my grandparents who didn't speak English and were on Medicaid. And so I had seen some of the challenges they went through and wanted to use innovation as a means to improve healthcare access and affordability and quality. And I saw this as a way to build, which I was really excited to do something more entrepreneurial. And so I'm just so grateful for my time at NEA because it really taught me investing and gave me such a fantastic platform. And I think that it was very serendipitous that I came across Zeal. And through that, I had the chance to build upon my skills at NEA and start something and be entrepreneurial. So that's kind of how that journey happened.
When you're at an amazing investment banking firm like Goldman, there's going to be tons of recruiters that would try to target your department on what you're kind of working on. And then it's really good to actually form, relationships if you're an investment banker with the other investment bankers because they know who's actually, which VCs are actually reaching out to them. And they can actually talk about it if you guys are in the same department, which is the amazing part. And then it's like afterwards, you really have to show that you are actually a good VC, someone that can actually be trusted. And, it's like Emily had a friend who's a founder that is associated with Zeal. And that is where the trust came in. It has to be, if they're hiring a VC, it has to be someone from that they trust themselves, or it's from someone, a trusted friend. If you don't have either of these factors, it's really, really hard to go into a VC fund. I know that, you're probably amazing at starting relationships and then maintaining that relationship. Could you talk about what are ways that you use that are kind of unique to maintain relationships with someone who's more experienced, senior, or just high net worth person who's really, really busy?
That's a great question. I would say that in general, in terms of relationships, I try to really be giving and think about how I can give back in every sense of it. And so one was I would plan events. And so I would do thematic dinners at first in the healthcare space in the Bay Area on topics like healthcare interoperability and data or the healthcare tech stack. And I would invite founders and investors, both junior and senior. So they would get a chance to meet with CEOs and companies would get to meet with investors. And I'd also have the chance to bring people together. So that's an example of how I try to give back. I also always try to share deals that are relevant to other investors in my network. I really try to listen to what is their mandate, what could be interesting to them, and send companies their way that might be a good fit. Whenever there's an article or something that I think is really relevant, a good reading that I've done, I try to pass it on as well and just be really top of mind. So the first one is like thinking about ways to give back. The second is really really having set touch points with people. So I have quarterly Zooms with other fellow investors. And for me, I know that a lot of times, especially when I started in VC, that general partners were just going to be really busy. And so honestly, I didn't even necessarily try to do quarterlies or frequent catch ups with them. I would still try to add value through dinners, etc. Instead, I did frequent catch ups with other associates who eventually, like me, became some of them became promoted to senior associates and principals. And so now I have this whole cohort of principal friends, right? That we continue sharing deals. We're on texting basis and we've become friends, right? And so we, first of all, like have done these frequent touch points. And then the third thing is being genuine. To me, building a relationship goes beyond work. It means checking in on how they're doing, how their families are doing. It means spending time with them outside of work. And so for people I really connect with, other investors, other founders, I've gone on hikes with them. We've gone on trips together. We've gone skiing. So there's really like this element of being genuine to who you are and sharing that with other people. And so I will share about my life, right? I recently got engaged this year. Moved and just like all the life updates that I want to hear about them that I'm willing to share. And so being authentic and being genuine and going beyond the transactional is also how I've tried to develop relationships. And to summarize, I try to give back. I try to make sure the touch points are frequent with the most relevant folks, right? And oftentimes it's people in my seniority level or when I was more junior, my junior level. And lastly, just being really authentic and being really genuine and finding opportunities when I'm in a city, when I'm traveling to say, hey, I'm in town for the day, like want to grab a coffee, want to go for a walk, and like drinks on me, that type of thing. I think those things can go a long way in terms of building long lasting relationships.
It's just like Emily says, it really goes down to giving value, not only to their work life, but also to their personal lives as well, where it's like, everyone has things and hobbies that they like. And, if you're like Emily, who likes to go to hiking, then heck, invite Emily on a hiking trip when she's in town. And it's just like those really, really little touch points, like Emily says, that keeps you at top of mind, really keeps you, if any opportunities really opens up, whether it's sharing deals with investors, whether it's even just like sharing articles to them that, you have a unique perspective they don't have. And heck, maybe they won't even have come across it if not for you. And that's where you bring access to them. And if you can bring access, if you can bring value, and if you can connect them with other people, then you're really, really on a great track to really maintain these relationships with everyone. And one unique thing that Emily actually did is, she actually shared deals with people, like associates or the principals, rather than just like going straight for the general partners. And that's actually a really, really smart idea. After you guys have fun, you became friends, and then you guys just talk about stuff. It's just like, oh, that's a cool deal. You should meet this founder, and they might have more time. They might talk to you more because you guys could be, in the same age. You guys have same experiences and stuff like that. It's just about relating to a person more. And when you really relate to that person, you become their friend. And becoming a friend is how have strong relationships. 80% of the LPs who invested into Zeal's first fund also invested into the second fund that you kind of just closed. What strategies did you guys use other than delivering great returns to retain these LPs?
I would say similar to building relationships with investors and founders, you also need to really build relationships with limited partners. And so it starts early. It starts with understanding what their focus areas and priorities are. So some of our LPs are large financial institutions or large healthcare payers and providers or endowments. And so each of them has different priority areas. Some may be interested in co-investing and direct investing with us. Some may be interested in developing commercial partnerships, especially in the case of a financial institution or a healthcare payer. And so we like to send them interesting companies, either in our pipeline or our portfolio. We like to share the trends and reports that we're seeing. And we also really focus on community building. So after we announced Zeal 2 this past week, actually, we organized a community reception on Thursday in DC and brought together about 100 LPs, investors, portfolio companies for them to all meet each other. Again, as we think about adding value, bringing together the community, meeting each other, and then also reminding them again, this is our strategy. This is where we focus. We're a sector specific firm focused on healthcare and financial technology and future of learning and work at the seed stage. And this is what we're investing in, right? So people know when they see companies, they can send it our way. But also, when they're seeking companies, they can ask us, right? And we can have great conversations about those sectors. What's happening? How is AI impacting healthcare and financial technology and embedded finance, right? They know to come to us. And so for us, those are a few ways that one, thinking about what are the priorities of LPs? How can we add value to them and really build the relationship with them over time? Keep them posted on our progress. And then two, just really thinking about broader community building and bringing our LPs into that fold along with everyone else in our ecosystem, our brilliant founders, our portfolio companies, in addition to co-investors and other ecosystem leaders, even folks as we're thinking about building in DC, like people in policy makers, think tanks, right? How can we bring them all together as we're solving some of the toughest problems in society?
Yeah, and it's really about connecting them with each other to form a strong community and then to tell them that they are valuable, to these founders. Their knowledge and expertise is also valuable. And the last thing is really just giving value back to them in, whatever their priorities are, really focus on that and try to help any way you really can. For VC, looking at deals every day, what are top three things that you look for in a startup when you're considering whether or not to invest? And what are two amazing stories of your most successful investments so far?
It's hard to pick favorites. So perhaps I'll highlight one from NEA and one from Zeal. One from NEA that I want to highlight is actually a company that started out as an incubation and later turned into a really impactful growth investment in a company called Curana Health. Curana Health is a value-based primary care provider for senior living communities and residents, older adults that live in these senior living communities, like skilled nursing facilities and assisted living communities. So we started this company in 2020, 2021. We funded it in 2021. And today it is impacting just really, really helping residents across 1,000 senior living communities in over 25 states. And it's brought down hospitalization rates by over 30% by being proactive with primary care. But the thesis of it came through NEA. We researched the senior housing market. We talked to a lot of different operators. We talked to different folks in value based care to build that clinical model. We brought in the management team and helped grow it. We helped with early acquisitions. And so it really felt like both a little bit of building actually at the earlier stages and growth investing in one. And so that one is one. And then the second one I'd want to highlight is a exciting company out of our Zeal healthcare portfolio. This is a company called Seven Starling. And so they are a maternal mental health platform. They offer therapy and medication management and an in-app digital health app for moms from fertility all the way through postpartum. And as you may know, 1 in 5 moms will encounter some type of mental health condition during their motherhood journey, but over 70% aren't able to get the help that they need, either due to it taking weeks to get matched to an network provider, or honestly, just not having the time. Having a new baby, it's a really tough journey, and it has been stigmatized in the past. And so Seven Starling partners with over 1,000 OB-GYNs and is in network with most major commercial providers and now Medicaid as well in 15 states. And it's just grown tremendously in both its impact and its scale. When we first invested, they were in 5 states and they've tripled that to 15. They are now also serving moms on Medicaid. They're partnering with other exciting women's health companies to become a more end-to-end women's mental health platform. And the co-founders are all female. Just actually the CEO had her own baby recently and used Seven Starling. And so it's just such a incredible journey because of the impact that they've made, their growth and scaling in a short amount of time. We invested in them just last year. And then maybe I'll touch on one in the fintech space. At Zeal, it's called Debbie. Debbie is a rewards platform that rewards positive financial behaviors. So think about it almost as a reverse credit card. For a credit card, you get rewarded for spending. But as you may know, many folks are actually still paying off massive debt, right? And trying to get their financial um, profile back on track. And so Debbie actually rewards things like savings and paying off debt. It partners with credit unions and banks and financial institutions. And it's a B2B2C company where it's actually attracted new millennial and Gen Z users to financial institutions, bringing in new sources of revenue and deposits, right? As they get people to reactivate dormant savings accounts or start new savings accounts and pay off their debts and ultimately build their FICO scores, their credit scores, their profiles to become more valuable customers for these FIs while also improving their financial health. So that one is also female led by 2 co-founders in New York City, actually. So that one is one that is really exciting and one that I'm closely working with too.
And, that's part of the access that you actually bring. Because, it's like without your perspective, it's really hard for funds with maybe all male partners to kind of just like look at those deals and be like, oh, they might be good investments, but we don't truly know about it. And especially how, the healthcare system is just so traditional, really, really making a change for that. So then it's really simplistic. And then make it really, really simple for people to actually just access all the resources they can so they can actually live a healthy life and have a great impact on the world that they can share in the future is exactly what, Emily wants. And heck, even for the fintech one, it's like people, is struggling with so much stuff, even with debt. And there's stuff that can be done. And if the right system actually comes along, then people's lives can actually dramatically change for the better. I remember, you were talking about how you had to develop like which questions you actually ask like founders. What would you say like is the top 2 questions that you kind of ask them when you're evaluating whether to invest in a meeting?
It's hard to narrow it down to two. I would say the topics that I am most focused on, though, are the quality of the team and the tie between the founders and the problem that they're solving, really assessing that founder problem fit. And so if I were to ask 2 questions, they would be aligned along the lines of one, what is the burning problem that you're solving and why is now the right time? And the second question being, why are you the team to best solve this problem? I think that those 2 questions get at one, is this really a burning problem? Are the customers like, we needed a solution yesterday and we will pay the money necessary to get a solution to this because it is so, so important. And then two, why is it this team, right? Founding a company is really difficult. And why is this team motivated? What experience and insights, unique insights does this team bring? And what are they going to do to learn and make it happen and do to be resilient as the market continues to evolve? And so those would be, if I had to limit it to two questions, I think what I'd boil it down to.
Yeah, which is the perfect two questions because, if you're going to an event and maybe you're a scout, maybe you're an associate, maybe you're just a VC, if you ask these clue questions where it's like, why is this a burning problem? And especially why now? Because timing is one of the most important things. There's probably like six or seven, or in every single decade of a person trying to solve the exact same problem. So why you? Why that timing? And then obviously the team is the most important thing. Like you you really, really have to execute and you have to pivot tons of times. So you have to be the team that really, really can withstand that. And, doing a startup is not easy. And many people, when they did it, they go back and they look and be like, okay, if I knew I had to do all these things, I would not do it. So why you and the team? And this is just amazing two questions to ask at an event and to gauge whether, these founders are good enough to pass on to VCs. Looking ahead, what trends in venture capital are you most excited about? Zeal, you're focused on founders with mental health and wellness, social detriments, health startups. What do you think is really overlooked in the market right now?
That's an interesting question because I think one is like interesting trends, and then one is what is being overlooked. And so something that is very much looked at and something everyone is talking about is obviously the impact of AI, which I totally believe will be huge and evolving and impacting our industries, whether it's fintech or healthcare or how we learn. I would say, and when I think about AI, I think about the capabilities evolving faster than we think, but the deployment taking longer than we think because of legacy processes, especially in healthcare, legacy processes, workflow, in an environment where many things are still manually logged, in an environment where providers are still using fax. It's going to take longer than you think, right, to get AI capabilities to ensure that it's accurate enough so you don't have hallucinations, to ensure that the data is representative of the population and not biased, right? That you're not actually exacerbating bias through AI. And so that's my thesis around AI. I think it's going to be an amazing enabler, and it already is, as you think about AI scribes and clinical decision support, the impact of AI in radiology and payments, and how it's having a role in terms of helping lenders make fair decisions about who they lend to. It's tremendous, but it will take more time, and we need to be thoughtful about these implementation and the deployment. In terms of overlooked areas, I would say something I'm really excited about and continue to be excited about is precision medicine. And so we saw precision medicine in areas like oncology, where you can now do genomics. You have genomics, genetics, but there's also just so much you can tailor to personalize medicine. So the treatment you give one person may look quite different from treatment for you compared to treatment for me, right? Based on our genetic profiles, our family history, even our epigenetics, the things that are outside of our coding genome, but even things like social determinants of health, like the treatments may look different based on where we live, right? Think about that. Think about things like food. Think about things like exercise and lifestyle. Things, how treatment should differ based on our work schedules, right? And when a patient can actually go into the clinic to get treatments that they need from a doctor, right? Or certain infusions. And so I think that precision medicine in the broadest sense of the word is really powerful because I believe that outcomes will be better if we are very thoughtful about not treating medicine like one size fits all, but instead really focusing on each person's individual profile. And I think we're getting more data on people and understanding that in order to treat people on a more personalized level. As you think about wearables data, as you think about genomic data, as you think about social determinants of health data. And I think that's really exciting.
It's like all these where now is literally the time to do a startup. And if you're a VC, now is actually kind of the best time to have, invest in startups because startups are actually becoming democratized. And even in like healthcare systems, there's slowly, becoming less regulations. People are more open to really just like break that barrier of regulations so people can actually live better lives and make it really, really simple for them to utilize all the resources that, the US has, that any country really, really has. And there's really no reason why someone shouldn't be able to live a great life and have great health just because of the healthcare system if there's too much regulation. I know you talked a bit about how to break into VC. For our viewers who needs an actionable plan to implement right away, what would be your recommended 6-month plan to fully break into VC for investment bankers?
If I were to break it down overall, in month one, I would really try to learn more about the industry of venture capital. So I would recommend reading things like term sheets and negotiations. I would recommend signing up for newsletters like Axios Pro Rata and Term Sheet that really track the venture capital deals going on and starting to develop a thesis about a sector you're really excited about. So learn about what venture capital is, learn about sectors, and learn about deals to start developing a thesis. In months 2 and 3, I would really think about starting to do outreach. Most of the time in venture capital, I would say, with the exception of perhaps investment banking and consulting, it's usually more outbound outreach than recruiters coming in with jobs. I would say, especially for firms that are smaller, they oftentimes don't necessarily work with a headhunter or recruiter. And so I would actually encourage folks to outreach to at least 10 to 15 firms and not necessarily say, hey, I really want a job, but just learn more about them and what their investment focus areas are and start sharing deals that you see. Or if you're in investment banking, you have a whole research team, so you can share your research with them, right? You could share your trends with them. You could start offering value, going back to offering value and building genuine relationships, right? And you can also think about in your job, and this is what I tried to do when I was an investment banker. When I would look at different companies I work with, I would try to ask myself, would I invest in this company? And write out the thesis and the risks. So you want to start thinking like an investor. In month 4, I would start thinking about how do you translate what you've learned in the VC space, your thesis, your outreach, into things like thought leadership and into things like actually starting to share deal flow and build community or whatever that looks like to the extent that your firm allows it, right? So obviously there are certain firms with strict marketing guidelines or strict public or social media guidelines rather. So whatever's within the bounds, start thinking about how can you share these insights with other people. And then in months 5 and 6, I would start actually going to things like demo days. I would start looking at certain incubators, maybe going to YC's demo day, Techstars, etc., and see if you can even land um, a part-time thing or an internship in some way at a VC firm to get some experience. The best is if you can apply and ultimately land a role from some of those relationships that you've been cultivating since months 2 and 3, right? And so that's a 6-month timeline, can definitely really vary. And I'd say just to be actionable, that's what I would recommend.
And that's amazing part where it's like there's just tons and tons of things you can do, but Emily really just narrowed it down for you. So if you just kind of really focus on that first 6 months, whether or not you actually land a VC role, you're on a really, really, really great track on not only building relationships, but really giving value to those VCs and starting that relationship. Now, for a few rapid fire questions to wrap up, a few words or one sentence. Ready?
Let's do it.
If you could invest in any startup from the past, which one would it be?
I was thinking about this, and I would say one of the companies that I wish that I was a investor of back in the day is Viva. So Viva is a life sciences software platform, and it is a public company today, trading at around 45 billion. But I think that it was one of the pioneers in terms of software and cloud for the life sciences industry. And so if I were in investing back in the day, I think it's a great example of a healthcare or life sciences focused software platform that was able to scale and still hold such a market leading position after many, many years.
Yeah, that's awesome. And what is your favorite hiking spot?
So I recently backpacked Patagonia and it was incredible. We went to an area that's actually more private and endowed by the former CEO of Patagonia. And it was just such a unique experience to hike up to the top of the mountain and see the glaciers and then drink the water from the rivers coming down from the glacier. It was a week-long backpacking trip that I did actually in March. It's fantastic.
That's amazing. What is one fun fact about you most people don't know?
I started a glee club in high school. I was really into the show Glee. I've been huge into music my whole life, and my friends and I performed Viva La Vida by Coldplay my freshman year of high school through the glee club that we started.
Is there any thoughts you want to finish or we didn't get to cover on this pod that you would like to talk about?
I would just say that for anyone looking to get into VC, to really think about all the unique things that you have to offer and that there are many paths into VC. My path is just one, going from investment banking and working at startups and more from a healthcare research standpoint. There's so many different paths though. For some, they start in operating, they work at startups, they founded companies. Some come from consulting, and some might come from later stage investing. You really have something to
Yeah.
offer, whether it's your analytical skills or your sourcing skills or your portfolio company work that can really add value.
Yeah, and that's the greatest part about VC is that there's so much paths into it. And Emily's is just one path where, she really looked at, hey, what do I want to do? I experienced like all these types of stages. I understand exactly what the startup world is. I know what role I want to play. And, she became an amazing VC right now. And for everyone, there could be a different path and it's best to just find it through hands-on experience. That was amazing, Emily. For anyone who's listening who wants to learn more about you or your firm, what is the best place to reach you?
Feel free to add me and ping me on LinkedIn. And I would love to get to know what you're building if you're a founder or speak with you if you're a fellow investor. And if you're trying to break in, happy to chat. Hopefully, this podcast was helpful in getting you started.
Yeah, and I'll put her LinkedIn description in the comments below. Thank you again, and thanks to everyone who's listening. Comment a question you want to hear from Emily or from our next guest. If you enjoyed this episode, make sure to press the subscribe button, like, and share it with someone who's interested in getting into venture. We'll see you next time on Break into VC.